afternoon, good morning, good afternoon, and good evening, wherever in the world you are. Welcome to Palmetto Property Talk. This is episode 4, prepping for your home buying journey. So, Walker, how are we doing this morning?
Doing pretty good. How about yourself?
I am good, a little sleep deprived, but we're here.
We're here and popping.
All right. So, I think the big thing with this, I know we've talked about some pretty, I would say, in-depth topics in the past 3 episodes.
We have.
But I would say, with that being said, we need to really start from the beginning, and I think we should have done that with the first episode. But that's okay.
Hey, got to get your toes wet somewhere.
You're not wrong. So yeah, looking forward to this one. All right, so we're going to be going over some myths. We're going to go over, well, not really myths, but really explaining to you guys how important it is to be prepared when you're looking to purchase your first home or get pre-approved and all these other fun things. So Walker, I think we talked about it one of the episodes before about down payment and all of these other things and the myths regarding down payment and closing costs. Right. So really, what do you think we're trying to accomplish here at the end of the day? I know we're trying to teach people, but I want to make sure, we both are on the same page of how we're going to do that. And what do you think are going to be the big things that somebody's going to get out of this?
So this episode in particular, what we're really trying to do is give you a roadmap of, okay, how do I prepare to buy my first house? Whether that's, how much you need to save, what documents you need, because if you jump into it head first without having a good plan or a good roadmap, you're going to end up with more frustration than you are success.
Yeah, no, 100%. I think we were just talking right before this. I had a client who didn't have some very good expectations, still was yet to be pre-approved, and was like, I want to buy a $500,000 house. If you're watching this, I know your name, and I know you're still looking, but stop looking on Zillow. So the big thing is that so many people think they know exactly what they want, but that doesn't help when you don't know what you can actually qualify for.
Right.
So I think the big thing, I almost died there. I think the big thing is really, this is going to be a good episode for you guys to know, okay, here's the upfront steps so I know what I need to do in order to get pre-approved and know exactly how much I qualify for. So Walker or another realtor can help you get moving. So,
right.
All right, so
today's agenda.
The agenda.
Like a good old school teacher.
Yeah, apparently. Apparently we are school teachers. I never thought that was going to be my job. All right, so, the 4 topics we're going to talk about today. What you need to have to get started, what documents you need to hit the ground running, the do's and don'ts, and what the process is. So I think this is going to be good for you guys. We're also, just so you guys are aware, be on the lookout. We are going to be making a series on the process of home buying. It's going to be a mini series. It's going to be 2 3-minute episodes on YouTube if you're watching on YouTube. So that's going to be really good for you guys to really understand in more bite-sized ways. Also check out our YouTube shorts. Those are also really good. So yeah. Let's get started with that. Let's go through the first one.
All right. Setting those realistic expectations, which I think we were just talking about right out the gate.
Yes. So what I think so many people tend to do, and Walker, you and I see this a lot, is people go on Zillow, like, man, look at this house. It's $500,000. So
I could
so
totally
awesome. afford that. I make $90,000 a year. But they have no down payment and their credit score is crap.
Right.
So what do you think? What do you think the thing is? The way you approach helping people set their expectations,
other than just like a really hard reality check when they first talk with me of, okay, here's the down and dirty. This is what's actually going to happen. It's I think a lot of people get these misconceptions. I blame HGTV.
Yes. Yeah.
Yes, I'm going to go look at 3 houses that are perfectly staged, and I sharpen colored pencils for a living, and my wife works at a daycare 1 month a week.
Yeah. Yeah.
So
But
we have a $3 million budget,
and our parents are giving us $1 million for the down payment. Yeah. So I think the big thing is like, so many people think, oh, well, I really like this house, but it's way over my budget. And even after the pre-approval process,
right.
I've experienced that. So it's helping people, having to talk them off the ledge of, okay, I want this house, and then having to talk like a father figure almost and say,
just a little bit,
or a parent, I guess, because you could be a female realtor or a female loan officer, and just say, listen, you're pre-approved for X amount. You're not going to be able to buy this $500,000, $750,000 house right now. Right. This is an investment for your future. And that's what it's so important that people don't understand, is just because you're not getting your dream house the first time doesn't mean you can't eventually get what you want.
Right. And that misconception of, yes, I need my dream house right now, right away, is, especially for a person where it's their first home, it just is a little unrealistic unless you're making more than 6 figures.
Well, even at that, I mean here in Charleston, if
probably
you just
200.
If you want to make, if you want to be able to qualify for a nice house in Mount Pleasant, you need to make probably $200,000-$300,000 a year combined. So,
right.
Yeah. All right. So, obviously, Walker and I are here. We color coordinated today.
Exactly.
We did not. So,
total accident.
Anyways, it's talking to the realtor and loan officer early. So even if you're 6 months out, a year out from buying a house, I would say that is so helpful so you can get your ducks in a row, because I can help with credit repair and helping you understand, hey, if you want to buy a $350,000, $400,000 house, here's what you need to save, and here's where your credit needs to be.
Right.
And then Walker can talk to you about different areas and help you understand that there's different things that he can do. So Walker, tell me a little bit about what you would be able to do.
So, if you come to me, 6 months, a year early, granted, there's a lot of downtime, a lot of waiting, because I can't really do anything until I have that pre-approval. That's really my green light. But, I can help you avoid the common pitfalls of, I'm going to go look at a house on Zillow that's $10,000, like way over my budget. Yeah. Or I can, a lot of times it's really just with helping check those expectations and helping, the longer that you look at the real estate market and go, okay, I start to feel that ebb and flow. I'm starting to put my finger on that pulse. You can start to really get a true understanding for, okay, what can I actually get in this price range? What's good in terms of features for this price range? And people who come to me and they're like, I want to buy tomorrow. It's like, we haven't been through this whole setting of expectations that takes a while. And, I know this ties a lot into the last point, especially on my end, because my prep is much shorter than yours.
Yes.
Financial prep tends to be pretty hot and heavy, but pretty intense. But, setting those expectations and going, all right, let's make sure that you have an understanding of what is a good deal. That way, if we need to go look at 20 houses, you don't end up getting this sort of fatigue of just constantly looking at the same thing, and you can pick apart what the best features are for you, and we can start looking and figuring out your why. I think I'm going to talk about this in one of the mini series that I'm doing, that Home Buying 101, and we're going to talk about what's your why. Why do you want to buy a house in the first place?
Yeah. I mean, there's many different reasons why, and I think to your point, obviously my end is a lot more heavy when it comes to the finances and everything like that, because there's so much, here's the brass tacks. If you've got a cash buyer who wants to buy tomorrow, obviously you can do it.
I can do it. Yeah.
But, for your first time home buyer, I mean, there's so much that's involved, from, signing the agreement to work with you, and then also being able to say, hey, we need to get you pre-approved to actually know what you can qualify for. Because if I'm working with someone who makes $60,000 a year, I'm going to treat them 100% the same way I would treat somebody who makes $500,000 a year. The difference is that there's going to be a less that they can purchase, though. So with that being said, you have to be able to set expectations, because if I have somebody who's telling me they make $100,000 a year, but on tax returns they make 50,
right?
Yes, I have programs if they're like a business owner that they could use to qualify with bank statements, but they have to put more down payment.
Right.
So, that can change things significantly. So back to our original page. So sticking to your budget, I think that's, the same kind of thing. It's getting pre-approved and then saying, hey, Walker, find me a house in this price range that meets the criteria that we've talked about.
Right.
Because, it would be, I would say, really asinine for you to go out there with Walker and look at a house that's, let's say you're pre-approved for $300,000 even, and then
right.
you go look at a house that's
500.
Yeah, or even 375, and they're like, oh, well, I want to put an offer in for 350, and then you don't even have a down payment. That would be stupid. Yeah. That would be really silly. And
it sort of trashes the expectation that they have for all the other houses they look at. It's like, oh my goodness, that $375,000
that's what
house
I want.
was so nice.
Yeah,
that's what I want. Why can't I find that in $300,000? Well, they're totally different markets. They attract totally different buyers.
Yeah. Well, all I can say to that is make more money.
Well,
I'm kidding, but at the same time, make more money or have a larger down payment. That's how you're going to qualify for it. Unless you've if you've got a rich Uncle Harry out there who is willing to put $75,000 more down, hey,
or die,
more power to you, or you inherit it. Sure, Uncle Harry, he's a dead guy now. Don't kill your Uncle Harry. So then start saving for down payment, closing costs. I think that's a good transition from where we were. So we've talked about it a little bit in the past about down payment and down payment assistance, closing costs, all these fun things.
Right.
So, Walker, I know you're not a loan officer, but
that is true.
What do you think the average down payment is?
So, average down payment can range anywhere from 3% all the way up above 20, depending on the person. And, closing costs, people don't really notice that closing costs is going to be a big chunk of change. It's like 3 to 5% of your purchase price, or the loan size, more likely.
Yeah, it's the loan size.
So that's a sizable chunk of money, especially if you're borrowing $300,000 or $500,000 or $700,000.
Yeah, it is. So, guys, if you're trying to start saving to be able to buy a house, you have to have the down payment and closing costs. Yes, I do have down payment assistance programs, but I'm telling you now, what will be the best and serve you best is if you can save the money, do it. Because it's better to save on the interest rate, because the down payment assistance programs, yes, it's about 0.75% higher, so 0.75%. So it does make a difference by probably about $100, maybe more, depending on the loan size, a month. And that's just for the primary lien. Right. So that's just for the mortgage. And then with some of the programs, there's a second lien that's put in place.
Right.
And that might be at, freaking 12%. Yeah, it's like, it's only $9,000. Yeah, but it's at 12%. So that's like paying a terrible car payment or a credit card payment almost.
Yeah.
So that being said, we're looking at 3%. So if I'm buying a $300,000 house, if I put 3% down, I'm going to need $9,000 for the down payment. Okay. Then for my closing costs, let's say it's 2%. And I got a seller concession to cover.
Right.
Let's say total it was 3, but for the example,
Seller's concession covers 1%.
Yeah. So 2%. So I need 15,000. So 2% of 300,000 would be 6,000. And then, 9,000 plus 6 is 15. So that's more than you expected, because you're like,
Right.
oh, well, I have $9,000 saved. Okay, great. Maybe you can get a seller concession to cover closing costs. Great. That's something that you need to talk to your realtor about.
Yeah.
And I'll talk to your realtor about, say, hey, they can qualify for a $300,000 house, but they have to get seller concessions.
And they need to be at least this much. And then that can factor into our search of, all right, who's going to be the most willing and who's going to be able to give us that seller concession? Because, certain sellers, it's like pulling teeth.
Yeah.
It is. I mean, it's kind of crazy.
Yeah.
People become attached to homes. People become attached to the idea of getting their money out of the house. And so, if you're looking to buy your first house and you have a bad seller or a seller who's just indignant and not willing to work with you on a lot of things, it can just end up souring the whole experience.
Yeah, I mean, I think it's not easy, sometimes for people to let go of their home, but it's also, when are you buying? Because right now, and I think we're going to talk about this in a little bit, right now is a perfect time to buy because it is a buyer's market. I mean, it is 100% a buyer's market. The inventory is at a not an all-time high, but it's at a high point for the past few years.
Right.
And there's way more listings out there than there are buyers. So you can negotiate a seller concession a lot easier than you could in the past.
That is true. Very true.
All right. So, fun one. All right. Avoiding big purchases or new credit. So, Walker, what do you think a big purchase or new credit, what does that mean?
Opening a new credit card, buying that boat you always wanted. You needed the boat.
Financing a boat.
Let's go finance a boat that's $300,000.
God, you might as well get a mortgage.
House, exactly.
So, exactly. It's so important for people to, and this is what I try to, I would say, almost beat into the heads of every borrower is, do not, please, open any new credit cards, take out a loan for anything during this process. If you have, a home already, or if you, let's say you refinanced a car loan into a better rate, that's different because it's going to lower your monthly payment. But if it's something that's going to add to your debt, do not do it during the pre-approval, during the loan process, or even prior to, because it can hurt your credit score. It can hurt your debt to income, which is important because that lets you know how much you can qualify for. So that's so, I would say, not talked about enough because so many people want to talk about, oh, I can buy a house with 3% down. That's great. But if you screw up the deal and lose the house because you did something and then you come back and yell at me about it, I'm sorry. I'm going to listen to you. But at the end of the day, I'm going to tell you what I told you before. This is on you.
Should not have bought the new Rolls Royce.
Yes. Everybody out there is buying Rolls Royces. Yes.
Oh boy.
All right. So Walker, when we're talking about documents, keeping them accessible, what kind of documents do you think we're going to talk about when it comes to that?
Things that verify income, employment, tax returns, various things that, he's going to need in order to get you pre-approved in an expedited fashion.
Yeah. Yeah. So big ones are going to be tax returns, W-2s, current pay stubs. Obviously, you can get that to me after the application's in. W-2s, tax returns, pay stubs. And then if you own a business, I can still qualify you. You just have to have some other documentation like profit and loss.
We have all that on the next slide as well.
I think so. But anyways, all of this is talked about, I believe, in the next slide. And then also, most importantly, can you take that off real quick so we can see? is thinking about your monthly comfort zone. So when it comes to a mortgage payment, it may be higher, in a lot of instances it is, than your current rent. Is that a bad thing? You might think it is, right? So let's take a step back. If I'm paying $1,750 a month for my rent, but let's say I make $4,000 a month or $4,500 a month. Okay, that's doable. If I can get max pre-approved for like, I don't know, a $325,000 house and my payment's going to be, let's say $2,100 a month. Are you going to be able to, do you think you'll feel comfortable in your current lifestyle paying $2,100 a month? That's $700 or $650 more a month. So right. That's a big one to keep in mind. That's why I ask my clients, I say, hey, Mr. and Mrs. Borrower, how much are you guys paying for rent right now? Oh, we're paying, $1,750. Okay. How much do you guys think you want to pay a month? Because at the end of the day, I'm not just going to give them the pre-approval and then just let it go. I'm going to ask them, hey, how much do you feel comfortable with? Oh, well, we feel comfortable with $2,000 a month. Okay, let's look at some options. So that's something that we can talk about more later, but this is something that I think a lot of people don't think about is, what am I comfortable paying each and every month? So
it's more so focused on what's the maximum amount of money I can spend on a house rather than what makes the most sense for me.
Yeah. Well, awesome, man. All right, the fun ones we were just talking about. So, docs for financing. So this is related specifically to me as the loan officer, what I would need in order to get the best picture of your income, right? So 2 years of W-2s and tax returns. Your W-2s, if you're working, and the majority of people are, working for an employer that pays you bi-weekly, and they take your taxes out, and you're not an independent contractor, they're going to pay you W-2, right? You'll get one of those in the mail at the end of every year or the beginning of every year. And the tax returns, obviously, once those are done, don't be a tax cheat. You won't be able to qualify for much, just an FYI, or at all, because I've seen it happen.
Oh, yeah.
So those two are really important. Pay stubs, if you can't get those immediately, fine. But the most important ones are the W-2s and tax returns, because that tells me here's what your incomes look like for 2 years. If I see it consistently growing and it's the same business, great. If I see or same type of business, great. If it's, okay, let's say Walker is working in 2023, he was working at ABC Toy Company, right? Making toys, right? And he was making, he made $30,000 in 2023. And then in 2024, he's still working there. He got promoted. Now he's making $55,000 a year. Okay, that's a good thing because that shows consistent income at the same company, which shows that it's likely to continue, and it's likely to continue to increase in how much he makes. So that's a good thing. Tax returns do the same thing. The same thing or a different thing when it comes to these W-2s and tax returns is if we have a different scenario, Walker is working at ABC Toy Company for 2023, and then he goes into a different field or he goes to a different company, then if I can show that his income is consistent and then I get verification from your job that you plan to stay there, then that helps build the case as well. So big thing is 2 years. You don't have to have 2 years. If you are a college graduate, I did my first loan was with two recent college graduates. They weren't even college graduates when I started working with them. They called me up. They're like, hey, Will, we're at College of Charleston. We're looking to buy our first house. We want to maybe go into investment properties in the future. They didn't even have a current job. I mean, they were part-time somewhere.
Right.
But they just had a degree and they had a job offer letter, and we got them a house.
It's a pretty good deal.
Yeah, pretty good. All right. Sorry for droning on about that. Then, guys, pay stubs. So you need 2 pay stubs. So if it's the middle of the month, I'm going to need the second pay stub from the month before and current pay stub for this month. So that just shows me what you're making each and every month. All right. And then 2 months of bank statements. That just shows me what your assets are looking like, how much you have in the bank. So that it's going to include checking savings account, retirement accounts, investment accounts, all that fun stuff. So those things are helpful when helping qualify how much you have for down payment as well as for closing costs.
Your do's and don'ts.
All right, Walker, I think I've droned on a bit.
Oh,
man.
yeah, just a little bit.
Just a hair.
Yeah, so, these are more so what you should do when you're looking to get a house, and what you should not do. Just common mistakes that we see people make, big don't. Big don't. Hop on Zillow, use their calculator, go, oh, I can afford $750,000 worth of house.
Yeah.
And it's like, you need to actually get the brass tacks and talk with somebody, whether it's Will or the people at your bank, and go, what can I actually get approved for?
Yeah.
What are the things that actually make sense for my financial situation? And then big things like we were saying, blowing all your savings on random crap. Boats, cars, furniture is a big one. People go and they start shopping. They're like, I'm going to start buying furniture. That way I'm ready to move in as soon as we close. Well, you just financed $10,000 worth of furniture. Now you can't qualify for your house.
Yeah.
So it's like, just wait until after it's closed, after everything's said and done. And then we can look at getting you ready to move in. I know it seems counterintuitive. You get the keys the day of closing and you're like, I'm ready to move in. You're roaring, you're ready, but it's like, just hold off, have patience.
Yeah. Well, it's definitely case by case, but I think
is true.
The big thing with this is, don't be foolish. It's better to have the house and not be able to move in yet. I love when people call me.
Right in the middle of stuff.
In the middle of stuff.
Oh, don't worry. It happens all the time.
Sorry about that.
No, you're good.
All right. Anyways, so it's just really important for people to realize, hey, if I'm buying something, okay, wait until you're done and then do it, because you can put yourself in a very big bind if you don't.
Oh yeah.
All right. So then your closing costs. What would you say is important with that? I know we talked about not ignoring it and making sure that we're on the same page. But
I also think it's a big deal, shop around for your closing costs. I know there are certain things you can't really shop around for.
Yeah.
I'm sure you have a laundry list of those.
Yeah. So like your appraisal, you can't shop around for that. The lender or the origination fee, you can't shop around for that. Certain insurances, you can shop around for insurance. This is the big ones that you guys need to remember.
Yeah.
You can shop around for your hazard insurance, and you can shop around for the attorney that you're going to close with. Here in South Carolina, you are required by law to close with an attorney. So those two things are really important, because you might have, oh, well, I know this one guy, he charges, he's a great guy. He's a real estate attorney, but he charges, double what the average closing attorney charges.
Yeah.
Unless everyone else is terrible, I would go with the cheaper option, especially for first-time home buyer like our audience, because it's going to charge them a lot. They could use that money to buy down the rate. You could use that money to put more down payment. There's a lot of things that it could impact. So yeah, absolutely. The closing costs are something to not play around with.
Oh yeah. I also think, it's important to mention what you should do, not just a laundry list of you shall not.
Yeah.
Like we were saying earlier, it's better to get out ahead of the game. Come talk with us early. We don't care if you're 5 years away. Even though that seems like a long time, it's not really in the grand scheme of things. I mean, it seems like yesterday that COVID happened and we're already 5 years past that almost.
Yeah, it's true, man. That is very true. So absolutely talking to a realtor and to a loan officer early so you can start putting a plan together is so important.
It's very important. And, setting realistic expectations, like we were talking about. Don't go on Zillow, don't go on realtor.com. Even though it's fun to go house shopping on the internet, it's not fun to go house shopping after you've done that, because you will very much not like what you see. There's not the 3 house rule.
Yeah.
And then, sticking to your budget, like we were talking about earlier, whether that's your day-to-day budget of, all right, I need to stick to this, and even if it's boring and there's no thrills to it, continue to save, continue to be fiscally smart. That really helps build your case essentially to the financer that you are able to repay the loan. And, also once we go house shopping, sticking to your budget is just as important. It's very foolish to go, I'm going to go see houses that are $50,000 over my budget.
Yeah.
Because you're going to, one, really blow your expectations out of the water. You're going to just compare everything else against that house that was too expensive. And then you're, after you've seen that house, you sort of get this wish-washy view on price. I've seen it happen a lot where people they start down the road of, if I could just qualify for more, if I could just qualify for more. And then it just ends up leaving them wholly unsatisfied with their purchase.
Yeah. I mean, it's hard when you have someone who's used to, on paper and in my bank account, I make X amount a month, but in reality, since it's not taxable, or, let's say it's a married couple, my husband owns his business, but with our accountant, we write off a lot. Okay, well, that's going to kind of screw you because you're not going to be able to qualify for as much. But it's also, having the conversation with someone, hey, what do we need to do in order to qualify for more? And that's something that we can help with. But it's also, understanding buying a house is an investment because you're building equity. If you're paying rent, you're not earning anything. When you leave that apartment complex or you leave that house you're renting, what do you have to show for it other than money being out of your bank account?
Yeah.
Nothing. You absolutely get nothing. So maybe your credit may improve, but that's negligible at the end of the day.
In the long run.
All
the
right.
timeline. What is the timeline for buying a house?
The numbers. What do they mean, Mason?
What do they mean?
All right. So I'll start from here. So the big thing is pre-approval. If you get me all the documents, I can get a pre-approval out within a couple hours, to be honest with you. If you don't give me all the documents, it's going to be really hard for me to pre-approve. I'm not going to pre-approve if you don't give me something to work with. Right. We don't do verbal, I make X amount of money a month. Here's, pre-approve me. That's not how that works.
No.
That's absurd. That would be, I can't verify your income. You're just telling me you make $4,000 a month, but I don't even have I don't even have pay stubs. At least give me pay stubs.
Right.
So yeah, that's, get all the documents to me. I'll get you a pre-approval pretty quick. Then after I get a pre-approval, I'll send it to you. You'll get it in an email. It might not just be me. It could be another loan officer. And then after that,
moving on to
the house hunting. Yeah.
Home buying is probably the most fun part, even though it's the most, I wouldn't say it's the most headache part, especially considering financing's involved. But that loan part, it's fun. And then the house buying is probably going to be the most relaxing part of it. You're going to go look at houses, and, depending on what the market's doing and what you want and how hard it is to find your needs, not your wants in particular, because remember, you can buy your dream house later. Finding out what your needs are, maybe hitting one or two of those wants if you really need to. And then, that can vary. It can be anywhere from 2 days to anywhere from 6 months, depending on what's happening and what your requirements for that house is.
Yeah. I think, right now would be a good time to take advantage of the listings that are out there, because you could probably do it in a much more expedient way, especially with some of the incentives that are offered by new home builders. But do beware, sometimes there's not always, things aren't always what they seem. They may be new, but there might be issues when they're building. But yeah, I think end of the day, it's a good point. It can be really quick, or it could be 6 months. It just depends on what you're looking for and your price range.
Very true.
So then underwriting. So I wouldn't say it's just underwriting. It's processing and underwriting. So we're going to gather documents on my end. My loan processor is going to call you. I'm going to call you, especially if you don't answer the phone from my loan processor.
It's going to be a long process.
Yes. So we're going to be getting, all of your finances. We're going to have to, dig a little bit into your finances. So, just be ready. It's going to be a bit stressful.
Very true.
But it doesn't have to be that stressful if you follow the steps we were talking about before and getting these things prepared. Because a lot of people will, I don't know where my W-2 is, or I haven't talked to my HR ever about getting a pay stub. So those things, if we can get that done quickly, that's going to move the process along faster, meaning you're going to close and get into the house sooner.
Very true. Very true. I think even if it is like an onslaught, it's a torrential flood of emails and PDFs.
Yeah.
It's still
better that we're communicating with you than not. So if you have a loan officer that you're working with and they're not communicating well at all, that sucks. I would love to have the conversation and help, because one thing that I would say my loan processor and myself do well is communicate back and forth with the borrower and everyone involved in the transaction to make it be as smooth as possible.
Very true. And then the last step, the fun step, that closing, getting your keys in your hand, And then one thing I will say though, is when it comes to closing, we have to make sure that everything gets distributed correctly. All the funds end up where they need to go. There still is a little bit of work. Even once you get it clear to close, you still have to go to the bank and say, hey, I need to transfer these funds to these accounts. I need to, take the time to do that, whether you set it aside 6 days from closing or a day before.
Yeah. So all I got to say is at the end of the day, when it comes to closing, once we get clear to close, if you have funds coming from a gift or from anywhere else, if you have an investment account that these funds are coming from, find out where the funds are coming from, how they're being sent, and make sure they're going to be in your account before the closing, because that can push your closing back because something you didn't do.
True.
So if I have clear to close and I've been given my my estimated closing costs or my initial closing disclosure to know how much my closing costs are, once you get that, call the loan processor, call me, one of the two of us, or both, and then if you have the funds in a bank account, wire the funds to the attorney. Do it early, and it might be more than what the actual closing costs are, which is a good thing because then you'll get refunded for whatever the overage is. But that's something that will help you tremendously and make sure that things are smooth. If you don't do that, you're going to push back things, and you could even not be able to move into the home for another day. Right. So that's something that's, Walker and I have actually experienced. So please take our advice on this. Get the funds sent to the attorney so you don't have to push anything back.
Right. All right.
All right.
Mortgage rate snapshot.
Yes.
This is the fun part.
Yes.
All the numbers, all the graphs.
Yes, yes. All right. So right now we're looking at mortgage rates, and the big thing is there's a slight easing in the 30-year fixed rates, and what we're seeing is the rates dipping between 6.81 to 6.82%. I know the graphic I have on here says differently. Obviously, this does change every single day. But if we're looking at first-time home buyers, we're looking at FHA, which, if you looked at the screen, is going to be very similar to the VA. So what we're looking at for FHA is 6.41%. Then the VA is 6.42. So at the end of the day, if we're looking at the difference between FHA and conventional, FHA rates are a bit lower, like I said, about 0.2 to 0.4 basis points below the conventional rates, which does make a big difference. Yes, you're putting a little bit more down on the FHA compared to the conventional, but the rate change is significant. And also the VA rates, me being a veteran, that does matter. It still remains very competitive with rates still within 6.4%. And the top tier borrowers can sometimes get as low as 5.99, which is also very nice. And those are linked to the treasury yields. So your 10-year treasury note is going to be closely, but it's not identical to that, but it does help nudge those mortgage rates down. And with the news in the markets yesterday, they are holding rates another month, for another quarter. So we'll see what happens with that. But with this, the high rates have really stopped the new homes from being sold, as well as leading to more houses sitting on the market. But with the builders, we're seeing a lot more incentives, price cuts, and sadly, lower sales, which does affect Walker and I making more money. But
it helps the buyer get a better deal, though.
It does. But I would say the other thing is that we're seeing some rates are changing a little bit, but what we're seeing is still a hold pattern on rates, which is not great news, but we'll see what happens by the end of this year. But many people have been telling me for about 2 years that rates are going to drop, but we'll see about that. So that's my update on mortgage rates. I hope that's not too much information all at once, but we'll talk more later about all that. All right, Walker, I think you have a little bit of info.
I do.
All
this
right.
This little market snapshot. I do have a graph on here, so bear with me. Skip
We're
past
too
it.
far back.
Too far.
That's okay.
All right, yeah. So this graph is an actual listing inventory needed versus what's actually on the market. Mm-hmm. We're still short of what's considered traditionally balanced, which means 5 to 6 months worth of inventory. I think we talked about this episode 1. Mm-hmm. It's absorption rate. Absorption rate just means the amount of time it would take to sell every house on the market. Back in May of 2024, we were looking at, being about 4,300 short of a balanced market. And that's just looking at, how many sales we were making versus how many houses were coming on the market. But you do see that actual listing inventory line going up as time goes on. Even if, that 5 months inventory line is doing a lot of hopping up and down, that's just when it's peak time to buy. It's representing that.
Yeah.
And so you can see, it says we need 9,000 for a balanced market right now, which
I don't know if that's true. But
I don't know if that's entirely true, but
still seeing a lot of existing homes sitting on the market for, I guess more realistic like times.
More realistic amount of times versus 1 week or 3 hours.
Yeah.
You know, but those listings still technically being short of where demand is, but we are consistently seeing more and more inventory. You know, back in 2023, when I hopped on the game, we were looking at 2,000 or less than 2,000 listings on the market every day. So it just very, very fast. As soon as it came on, it was getting snatched up. Homes didn't last more than 2 weeks max. Now we're seeing homes that sit on the market for a couple months, and sellers are starting to sweat. They got used to it. And so they're behaving more like it's a buyer's market, even though it's still, a short market. But typical balanced market, you're sitting on the market for 6 months before you sell your house. And people just sort of didn't get used. They got used to
the COVID era.
The COVID era, or what did we coin it? The unicorn era. The unicorn era, where everybody was charging like they had a unicorn stable in their back porch.
I think, like you said, there's so much to be said about the actual inventory that's needed compared to what is available now. I think recently there was, a actual listing inventory of about 5,000. We broke that recently, but I think the big thing with it is, even though we're still short, what we're seeing, which correlates directly with what I just talked about, is with higher rates, we are seeing houses sit longer, and I think we're going to continue to see that. And there's going to be price improvements, as y'all like to call them.
Oh yeah.
Or basically that just
price
means
cuts.
They're cutting prices. So I think we'll see that consistently for the next, I would say the next 6 months. We're still going to see that unless things significantly improve with the economy. So, and we're still in a period of uncertainty with international events, with the Federal Reserve not cutting rates and holding, and inflation still being where it is. So definitely we're in an interesting time, but guys, I'm happy we were able to talk about all of this. And I think the big thing is take advantage of the market being where it is, because you can negotiate seller concessions. With FHA, you can do up to 6% seller concessions, which means you could buy down your rate, you could cover your closing costs. So that's a big one.
Very big.
Take advantage of that. Even though rates are a little high, it's still a good time to buy, because there's going to be, if rates do come down, prices are going to go back up. They're still high, but they're going to go even higher. So look at the long-term potential for your family or for your real estate investment goals. So
very true. Very true. And I think we were going to close out here with a little Bible quote, which I think is people need to hear.
Yeah, absolutely. So, for everything there is a season and a time for every matter under heaven. Ecclesiastes 3:1. So guys, I think Walker and I talked about this before recording this episode, about incorporating more of who we are. We're both Christians, and wanting to live that out and show that to you guys. So I hope this is encouraging for you guys, and just really glad that we're able to record this, talk to you guys, and just be able to educate everyone on what it looks like to buy a house.
All right. Well, if you wouldn't mind, like, share, comment, subscribe. You know the drill. And then, we'll have our stuff down here in the banner, QR code to our website here in the middle, and then mine and Will's phone numbers, emails, that's all there. If you want to get in touch with both of us, you can email us at info@palmettopropertytalk.com. And until next time, see y'all on the flip.